everyone, welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. And it's a Thursday morning and we have witnessed a strong start to the day with Nifty opening above 21,900 after a gap of 5 sessions. It's the weekly FNO expiry for Nifty today, and typically markets are rather volatile on such days, but it seems to, at least for now, that the ball is back in the court of the bulls, and even the global cues, they are looking rather constructive today after Wednesday's shakeout. Amit, isn't it?
Green everywhere. Good morning, Suyash. The Western markets, US markets specifically, are all in the green. Dow Jones closed in the positive at 0.4%. S&P 500 closed in the positive at 0.96%. Nasdaq Composite closed in the positive at 1.3%. Coming to the European markets, the stocks 600 was also in the positive at 0.6%. Hang Seng is back in the green. It's at 0.44% this morning. And Japan, despite losing its spot as the world's third largest economy and slipping into a slight recession after the GDP numbers of a slowing pace coming in, is also in the positive. Nikkei also is in the positive this morning at 1.05%.
Right, and Indian markets now, they diverged yesterday from the weakness that we were seeing in the global markets, but they are even but the participation we are seeing from both global markets as well as the local markets in today's recovery, and of course we opened gap up, but Nifty has turned volatile, and it's of course on the back of the FNO expiry that plays out for Nifty today, so keep an eye out on that. Broader markets are up about 1% or so this morning, and I think the real story is there because time and again, at least since October, we have seen a one-day shakeout. And even this time, February, on Monday, we saw that 3 to 4% shakeout in the broader markets. But, like it has been in the past, the markets have recovered, although the pace of recovery has been rather slower. So I am keeping a track on that. VIX is falling. That is good to see. That makes the case stronger for bulls. India VIX is back below 16 levels, and all sectors are trading in the green this morning. At least they opened in the green, but we are seeing some bit of volatility pick up in the market. But to understand the way forward for the market, let's also welcome Mr. Santosh Meena, Head of Research at Swastika Investmart. Thank you for joining us here on News9, Santosh. Always a pleasure speaking to you. And Nifty has seen a strong pullback, this week. It was especially a show of strength by the bulls yesterday. The index recovered about 300 points from the day's low, 200 points to the flat line, another 100 points on top of that. A strong gap up today as well. What's your view on the market? Are we done with the correction for now?
Yes, first of all, good morning, everyone. So, February is all about volatility, one day up, one day down. But yes, there was some signs that market has bottomed out, especially Bank Nifty has bottomed out yesterday because yesterday there was lots of negative news, especially rise in US bond yields and dollar index. And we took yesterday's weakness as a buying opportunity. Market showed great resilience, and after a takeout phase of profit booking in some PSU stocks and mid cap stocks, now market has become light and ready to move higher once again, and there are signs that we may again hit all-time highs, and banking stocks may lead from here because after a long period of underperformance.
All right, and I wanted to talk about Nifty Bank because of course that has been a laggard in the past many months, but they have led from the front in the last 2 sessions. The index is up about 1300 points from the weekly low. However, we are facing some bit of resistance around that 46,000, which by the way has been a critical resistance zone for the index in the recent past. But given the kind of strength that we are seeing in the markets and Nifty Bank particularly, do you think that we leave behind 46,000 for good this time? Santosh?
Yes, there was a strong fight between bulls and bears who at 20-day moving average. Yes, and Bank Nifty remarkably managed to hold this level, and yesterday it managed to close above its 20-day moving average. I think it was struggling to close above its 20-day moving average. Yesterday it managed to close above that level. So we can expect that Bank Nifty will cross this 46,000 to 46,300 resistance area. Once it will cross this zone, we can expect a rally towards 46,700 to 47,000 zone. So I'm expecting Bank Nifty should lead from here. Yesterday there was signs that it has made a bottom at at 200-day moving average, and now it is ready to move higher.
And one of the performers in the banking space has been Axis Bank, and in fact it has been an outperformer among the large private banks across multiple time charts. And even if you look at this last 2 days of recovery in Nifty Bank, the stock has led from the front. It has rallied by about 5% or so in just a matter of 2 sessions, and there seems to be some bit of a room left, as we are still about 5% or so away from its record high. What exactly does make Axis Bank stand out vis-a-vis other private banks, Santosh, and what are the price targets that you are ascribing for the script?
Yes, we are seeing underperformance in SDFC and Kotak Bank, but stocks like especially SBI and Axis Banks are supporting bank Nifty. And after a correction, Axis Bank took a support around 1000 mark, and now it is again showing momentum. So once it will cross 1100 level, I'm expecting fresh high in this counter, which is around 1150 kind of level. So I'm expecting at least target of 1150 in the near term, and if it manages to cross this level 1150, we can expect even higher targets. And I believe this 1050 level has become an immediate base for this counter.
Good morning, Santosh. I'll drive your attention to Hindustan Unilever Limited. Now, India is the world's largest importer of palm oil. Now, Hindustan Levers and the Andhra government are getting into a joint venture for the production of palm oil. HUL is looking to collaborate with as many as 15,000 farmers in Andhra Pradesh to set up at least 30,000 hectare of palm oil plantations. So much for the news. Now but when we look at Hindustan Levers and their competitors in the multinational competitors in India, the HUL share price, whether it is the last 1 year, it has been down in the negative, down by 7.07%. Last 6 months, it has been down 7.22% in the negative. Last 1 month also, it has been in the negative 7.96. Last 5 days in the negative at 2.54. But when I compare it to their competitors who are multinationals in India, Colgate-Palmolive, the stock price has been up over the last 1 year. A minor correction in the last 5 days, but up almost 15% in the last 1 year. Procter & Gamble, 12% up in the last 1 year. Last 1 month up almost 4%. A slight correction in the last 5 days. What do you make of HUL? Do you think this the palm oil project will give some fillip to the stock, that it will start performing? Definitely it has been an underperformer amongst its peers in the last 1 year.
Yes, this stock is underperforming since September 2021, and recently it has slipped below its important support zone of 2425 to 2400 area, which is not a good sign, which can lead more underperformance in the near term, and there is risk that it can head towards 2300 kind of level. So I believe it may see some period of consolidation in this 2300 to 2400 zone. It has to again regain this 2400 level to show fresh buying momentum. But yes, there are no signs that this stock will outperform in the near term. We may see some more period of consolidation.
Okay, so much for HUL. What are your picks for investors today?
Yes, I am giving 5 stocks. One is Reddington. The stock is showing strong bullish momentum. After a long period of consolidation, it is breaking out, and during the recent pullback, it took support at 20-day moving average. Now it is showing again momentum, so I'm expecting target of 225 in the near term, where 190 should be a stop loss. Another is recent listing stock Inox India. It is showing great momentum, especially in last 2 trading session. And there was a there was expectation of great listing, but the listing was not up to the mark. But now again showing fresh buying momentum. So 1150 should be your target. 11,000 rupees should be a stop loss. Maruti Suzuki, this stock is trading at fresh 52-week high, and after a period of consolidation, it is ready to move higher. 11,800 is target. 10,800 should be a stop loss. PSU banks are leading from the front, and SBI has shown great momentum. Bank of Baroda is also ready to move higher. So 285 should be your target. 260 should be a stop loss. And another heavyweight, Reliance Industry, it is ready to support Nifty to take fresh all-time high. So, and I believe it should cross 3,000 level easily. 3,030 immediate target, and 2,925 should be a stop loss.
All right, those are the top trading picks from Santosh Meena in the short term. Focus is clearly on the heavyweights. But Santosh, always a pleasure speaking to you. Thank you for joining us here on News9. Let's take a short break with that, and we'll be back with Mr. Kranti Bhatini of Wealth Mill Securities on the other side.
From fragile 5 to top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Stick here on News9, and the Indian markets, they have in fact slipped in the red. Of course, we expect volatility to remain high today on the account of the weekly FNO expiry for Nifty, but the index so far is taking support near the 21,800 mark. We are holding above that. We have in fact slipped in the red. Nifty is down about 0.16% as of 10 a.m. this morning. We are very close to the day's low that comes in at around 21,799. So far respecting the 21,800 levels as a support. Sensex has also taking support at around 71,700 mark. It's down 0.15% as well. The broader markets now, they are outperforming. Both mid cap and the small cap indices are trading in the green. Mid cap index is up 0.5%, whereas the small cap index is up almost 1%. And volatility, India VIX, now it's picking up once again, and India VIX as of 10 a.m. is up almost 1%, and it's at 15.6 sort of levels. And let's talk about sectors also, because Nifty Bank clearly has been the driver of recovery for the markets in the past couple of sessions, but we are seeing some bit of mutedness play out in today's morning trade, and we are actually, Nifty Bank opened about marginally lower. It was seen challenging the 46,000, the critical resistance for the index, but we have taken 0.5% cut from there on. Currently we are at around 5,650 levels. Among other sectors that are dragging the markets lower is FMCG, which has turned negative. It opened in the red, is down about 0.4% or so. Pharma is also trading with cuts. IT, media and metals, they are providing strength to the market, and that's how the texture is looking. But to understand the way forward, let's also bring on board Mr. Kranti Bhatini, equity strategist at Wealthmill Securities. Sir, thank you for joining us here on News9. Markets have staged a good solid recovery in the last couple of sessions. We did recover about 300 points from the day's low on Nifty, and a gap up opening today, but choppiness has taken over once again. Is 22,000 that key hurdle that we need to take out for us to move higher from here on?
Good morning. The markets are in a range-bound currently. They are in a consolidation phase. As you rightly mentioned, it has to take above that 20,000 level. But nicely, we are witnessing a strong recovery. It's a broad-based recovery starting from the mid and small cap, and the stock which have been recently have witnessed a sharp declines also. They have been in a nice recovery path right now. So what we can sense at this point of time, markets are in a positive territory, despite of volatility in the markets right now. The territory of the markets are going up in a positive trend. The long-term trend remains in a positive upward trend only. But what we can see right now is some consolidation that's taking place. Probably markets are not getting any kind of kickstart to cross that 22,000 level, Suyash, at this point of time. But what I can sense is next couple of months, we can see a range-bound nature of the market right now. So the pendulum is moving between too much exuberance and also at when the pendulum reverse, we are witnessing some kind of strong recovery is coming in the market. So the liquidity is quite strong. Sentiment is also more positive at this point of time. The joker in the pack, we should not ignore. Suyash, what's helping the Indian markets to sustain at this level is the crude oil. Crude oil is at a comfortable level right now. Couple of months back, we have been discussing crude oil reaching $100 per barrel. Crude oil has been comforting the Indian markets right now, despite of the worries, the wars, and also the Red Sea issues. Despite of all these facts, crude oil has been giving a comfort to the Indian markets. That's where the inflation expectations also coming down. As we are entering into the election season in next couple of weeks, so the mood is going to be completely buoyant. Market also looking forward from the outcomes and the feelers from the election scenario also.
And I mean, you expect the markets to remain range bound in the next couple of months. Safe to say that this pre-election rally that we all have been hoping for, that's at least for now not on the cards.
It's already factored in by and large, Suyash, from past 3 months. So what we can expect from this onwards, we can't expect any kind of strong positive policy decisions. So markets are expected to be in range bound right now. And also, the foreign portfolio investors have been a little bit cautious with respect to Indian markets. They are quite positive, but they are waiting for a valuation comfort to getting into the Indian markets on a medium to long-term basis. Once that kind of comfort and signal market gives, there is an ample liquidity that's waiting in the sidelines to get into Indian markets.
But are we competing with other emerging markets, Kranti? Because Indian markets, of course, we are on a better footing compared to our peers like China and Hong Kong. But the valuations are, of course, stretched. We are at a 20x of our earnings, whereas China is available at 10x. What's your take?
So given the kind of obscurity and the policy making decisions with respect to Chinese markets and Indian markets, so Indian markets remains a strong favorite for the investors at this point of time. There are some kind of money that is allocating towards the Chinese market that's going, but the majority of the pie is coming to Indian markets, and the global investors across the broad spectrum. It can be hedge funds, it can be the long only funds. Everybody are quite optimistic and positive with respect to Indian markets. So Indian markets is going to get a greater pie in the emerging market flows going ahead, and also in the MSCI Asia index also. Indian stocks weightage has been significantly going up when compared to the Chinese markets. So at this point of time, there is a euphoria with respect to Indian markets. So I don't think so. We need not have to worry about the flows are concerned towards the Indian markets. What we need to mainly focus is our growth and also the corporate earnings. These are the two templates one need to watch for Indian markets.
Good morning, Mr. Bathini. This is about public sector unit stocks. Now, they have seen some recovery in the last few days after falling down in on a week before that. Now, the BSE PSU index has been rallying almost 93% in the past year due to earning per share upgrades and return on equity improvements. But their price to earning ratio when it's compared to Nifty index is on a 40% discount. Jefferies, however, has been upbeat on PSU stocks. And if we take a look at some of the stocks across sectors, State Bank of India has been up in the last 5 days after recovery, 6.66% almost, NTPC almost 1%, Coal India Limited almost 3%, IRCTC 1.15%, even ONGC is up today, so is BHEL, Gas Authority of India Limited almost 6%. Where do you see PSU stocks? What do you make of this recovery? Is it going to continue, or is it just a blip and the correction may continue after this?
Amit, if we have to analyze and discuss about PSU stock, we have to also look at the rally that PSU stocks have witnessed in the past 1 year. As you rightly mentioned, in the year FY23, PSU stocks have been the outperformance, and the PSU index is one of the strong performer. From the month of August 2023, we have witnessed a PSU stocks have been rised in a broad-based way, irrespective of sectors, irrespective of the market capitalization of the companies. By and large, all the PSU stocks have been going up. I just would like to share a small anecdote with you all, my personal experience. We have landlines in as per the regulatory, or we need to keep landlines in our office. We still use the landlines. Okay, these are from MTNL. Past 3-4 months, there is some technical issue or something. These landlines have not been working, and our team has been behind them, right, sending the escalation mails. There was absolutely zero response from these guys. Personally, I have written an escalation mail. Till date also, there is no absolutely, but the share has been rallying. Various reasons. They have a land banking story. Yesterday also, MTNL is up. The core business is nowhere it's moving, but some kind of euphoria is coming back into the stocks, and there are some people advocating this MTNL. This is not a investment advice or something. I'm just sharing the live example. Some people shares, they hold strong land bank in the metros, so the stock is expected to do well. So the point I'm conveying to you is the stocks have been witnessed a broad-based rally. See, there are some PSU stocks which make landline telephone phones, ITDCs, Indian Telecom Company. Those stocks are also rallying. So the point I'm trying to envisage for the knowledge of the investors, what we witnessed in PSU stocks has been a broad-based rally. Going ahead, in the past fortnight, we have witnessed a vertical rallies in the majority of the PSU stocks. Now, the one thing what caused this humongous rally in these stocks, one thing is these stocks have been in a strong consolidation phase for years, and as the feelers that came from the government and also the usage of technology has been going up in the PSU companies, and also the management quality has been going up. The productivity levels have been going up. So there is some kind of significant fundamental theme also, some fundamental change also that has came into effect in these PSU stocks. Going ahead, is all the PSU stocks are going to rally from here? I certainly doubt. One need to now think about the valuations of these companies and the earning outlook of these companies. So it's going to be more stock specific, and going to be depends upon the valuations of these companies. One need to take into consideration. It's not a blind buy. Every PSU stock is going to rally. I certainly doubt. The momentum is in their favor, but one need to be prepared for the sharp kind of cuts also. Everybody talking about how PSUs got corrected recently, but one need to also take into cognizance, one need to also consider from which point these PSU stocks have been rallied. Probably these stocks have been corrected in the past 1 week for 10-15%, but from the bottom of these prices, from the low point of these stocks, the stock have been multiplied more than on an average. They given 18 to 200% returns. Some railway stocks have been multiplied. So which theme is going to play in a railway space, how these stocks are positioned, how the earning outlook is going to be. In defense space, how these stocks have been rallied, what is the relative valuations, and how the future outlook of these companies, that's going to play well. But they are in an interesting space right now. But earnings and the outlook of these companies going to play in PSU stocks.
All right, words of wisdom coming from Mr. Kranti Batini, sir. Always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you, Suyash. Always my pleasure to share my views with you.
But before wrapping things up, markets are seeing a strong bit of a bounce back. Nifty, as we speak, has taken, it has bounced back after taking support at 21,800. We are back in the green. Both indices are back in the green. In fact, Nifty is up 0.15%. Closing in on 21,900 levels. Sensex is also, closing in 71,900 mark. It had opened above 72,000 levels, so we'll keep a track on that if the index can take that out. Mid cap and the small cap indices, they continue to outperform markets. Both indices are up about 1% or so. Mid cap about 0.8% at 48,700 levels. The small cap index is the strongest segment of the market, and it's up over 1%, and it's back above 16,000 levels. Keep an eye out on volatility, because that will be one of the main factors, since it's the weekly FNO expiry for Nifty. As of 10:10 a.m. India VIX is down. It's up actually 0.43%, and currently sitting at about 15.5 levels. But that's all we have in this edition of First Stick. But we are counting down to News 9's Global Mega Summit, what India thinks today, and Prime Minister Narendra Modi will deliver the keynote address at the summit. The theme of the summit this year is how India is poised for the next big leap on the global stage. So stay tuned to watch this TV9 network initiative on February 25th and 26th.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for